Stock of the day. I thought we'd take a look at Life360 is upgrading guidance for subscription revenue growth and narrowed the range for revenue and adjusted earnings to a second half loss of between $3 and $6 million. Net subscribers in Q2 up 111,000, second highest ever quarter. Monthly revenue up 65%. It now expects to be hit consistently positive earnings and operating cash flow by late calendar 2023. The chief executive, Chris Hulls, calls it a value growth tech company. Let's hear what.
If you look at many of the companies that led the sell-off in tech, they were spending double their revenue to expenses. I think we're about maybe 20% over or something in that range. So it's very easy for us to turn a few knobs and make the company profitable. That is the underpinnings of our confidence that now that we've gone through this heavy investment period, it won't be that difficult for us because we were never one of the companies that had an upside down cost structure. Our margins have been high. The vast majority of our growth is organic. We're not overly reliant on marketing to grow. In fact, in the depths of COVID, we turned off all marketing and still grew MAU and revenue. So it's really up to us when we make that shift. I'm a very big believer in our vision. I think we have a ton of room to grow, which is why we do continue to make heavier investments.
Yeah, an interesting result. Tech company, of course, Life360. They provide applications so you can view family members on a map, basically track your kids and communicate with each other and receive alerts. Scott, what did you think of the Life360 result?
Yeah, Kosh, I thought it was a pretty good result given what the company is trying to do. I think it's one of those situations where you say, okay, is it necessarily the company you want it to invest in? Maybe, maybe not. Is it the strategy you'd like to follow or the business you'd like to invest in? Maybe or maybe not. But if we start with simply, is it doing what it said it's trying to do? Yeah, I think pretty much. I do think it's worth talking about the fact you mentioned consistently earnings positive and operating cash flow positive. That's fine, but operating cash flow is at the very top of the cash flow statement, not at the bottom. Right. That suggests to me that they're still going to bleed some cash, and that's, I think, the market's biggest concern. You mentioned value growth tech company. That pretty much covers all of the hot buttons. And the real challenge over the past, until about 2 months ago, for the previous 6 or 8 months, was what if rates go up further? What if these companies can't get cash? What if they simply run out of money and have to find either something else or simply go to administration? That's been the big concern, and that's the story of that exact share price graph we're seeing right there. That peak was the height of .com tech growth, everything's great. The depth, the trough there was, what if rates are terrible? What if everything goes badly? And I think you're seeing both irrational exuberance and irrational pessimism, quite honestly. It does seem like this is a business with the right trajectory. If you need to get to cash flow positive to make sure you can keep the lights on, it does seem like they're going to get there. It's not a business I love particularly. You mentioned track the kids. That's kind of one way to say it. Big Brother's the other way, and I'm sure the company would disagree with that. That's a suggestion, but that's where we find ourselves. Look, they're doing a pretty good job. They're getting traction. All the metrics they're trying to talk to us about are the right ones for a growing tech business. A little bit too spicy for me, but if you're in it for the right reasons, if you're in it for that sort of long-term story, you know it's higher risk. The metrics look pretty good. So hard to really criticize the company for what it's doing. As an investment, the challenge is, do you want to take on that level of risk and that cash flow uncertainty? Not yet for me, but I can see why people might want to, and I wouldn't criticize them for doing so.
Yeah, it's interesting. We had Family Zone, similar company the other day with a similar verdict from the panel to you there, Scott. Howard, what do you think of Life360?
Yeah, I mean, the problem with companies that don't make a profit but are going to make a profit in the future is only about 1 in 40 of them ever reach that future. The other 39 in 40 on average, historically on stock markets, never get there. So what you're really saying is, do I think this will be the 1 in 40 that actually gets there, in which case it's probably a very good investment, or is this going to be the other 39 in 40 that doesn't get there? And we in Teaminvest are a believer in investing in things with much higher likelihood of being wealth winners than that. So Teaminvest members would show no interest in this company whatsoever. But, there may be some people out there who are prepared to take on the risk or who have enough belief in it that they believe it'll get there. The one scary thing that he said, which he thought was a positive, I thought was scary, where he said during COVID, they switched off all their marketing and still increased subscribers. But the point is they still made a loss because during COVID, they made a loss the same as they made every other year. So to me, it's an unproven business model, but it looks a bit better than some of the other unproven business models that are floating around at the moment.
All right.